traders, Gary Wagner here. It is Tuesday, the 11th day of September, 2012. It is approximately 7 o'clock in Honolulu, making it 1 o'clock in New York, and this is the daily report for gold and silver. The markets today are on an absolute upside move once again. As you can see, current print in the cash market, 1733.45. We've had a high of 39 today, and we have had a low of 17.29. Currently trading up anywhere between $7 and $9 higher on the day. Traders, silver is also trading substantially higher this morning as it currently sits right now. As you can see, current print is 33.56. It has had a high of 33.95, just shy of $34 per ounce, and the low has been 33.28. Traders, before we start looking at gold and silver charts this morning, I want to take a look at the dollar index because I want to show you something that I find very, very interesting. You know, the dollar's been under pressure, there's no doubt. As you can see, we are looking at a weekly chart, Henkin format, so it's a lagging indicator. And what you can see, of course, is currently we are trading on the lows. We have broken through 81. We're at 80.34, as you can see right in here. And especially on these Henkin candles, when you are trading on the low like this, that is pretty significant. But here's the other thing that I'm noticing. We've talked about the fact that within the dollar market, on a technical basis, of course, that we're probably going to trade within this particular channel. And I talked about the fact that as it trades within this channel, it's probably going to simply move from the top of the channel, then move back down and kind of move in a perpendicular in the opposite direction of these parallel lines going down. However, there's one other thing that I think is worth noting, and that's as follows. Within this channel is another channel. And simply put, if we draw one line from our highs here and then another one from our lows here, you're going to see that within the channel itself, it has been really moving in this manner, meaning it's been going up and down throughout this channel. And this is what I'm finding interesting. When we take a look, it has hit the top pretty much every time. But in this particular case, as you can see right in here, it does appear as though it has broken below those lows. And that to me is fairly significant because you can see once it breaks through these lows, it could in fact really begin to tumble fairly hard. Now, what's interesting about it is when you take into account what we're looking at fundamentally, and fundamentally we've got the FOMC meeting coming up very, very shortly. That could, in fact, any kind of monetary easing announcement that's made could have a fairly sizable impact on the dollar. And I think that what we're seeing right now is that being factored into the market. As you see, we have really broken through any kind of support line on this upward channel right in here. It's worth noting anyways. The first chart that I do want to take a look at this morning is our daily gold chart, straight candlestick format, but it's what we're using for our basic Elliott wave count, as well as our Fibonacci extensions. You can see the extensions, which is what we're really using to predict where we think this major fifth wave will go based upon a relative distance of wave one and comparing wave one, of course, to the move in wave five. Many times they're equal, and that's basically the formula that we look at. But here's one thing that is worth noting. We have at this point, I think, very, very strong, compelling evidence that we have broken out of this basic correction that we've been. There can be no doubt that at this point, we talked about it and it wasn't really like the boy that cried wolf, because you can see the kind of energy that was released as this broke above this particular resistance area. Now, what is interesting to me now is that typically what we look to do to get a better kind of sense or feel for forward forecasting, once this intermediate wave one is complete, we'll use that as a benchmark for waves 2, 3, 4, and 5. Up until then, we really don't have any precision tools to do that. We're simply looking at wave 1 major, comparing it to wave 5 major. But I think what you're going to find that's interesting in the upcoming weeks and months, and I hope months, because we have to have wave 1 terminate, go into a corrective wave before we can really determine what we're looking at in terms of a more precise count. But we traders, we're absolutely getting to that point, and that's definitely worth noting. This is, I believe, a really beautiful way to look at the longer term move in the market. Traders, we are looking at a weekly chart. It is continuous contract off the COMEX. It is a Henkin format with the MACD, the MACD. And there's really compelling evidence. When we take a look on a weekly chart, we kind of take the noise out of the market and see what we are witnessing. There can be absolutely no doubt. You can see the strength of the breakout here. Look at the size of these Henkin candles. Lack of lower tails, perfect. Nice body size. Also, look at the fact that it's coming out of this really tightly wound consolidation period that went from red and then small-bodied green, and then you can see 1, 2, 3, 4 weeks ago, roughly, that kind of all turned around. A small candle with a tail. The candle that breaks through has no tail, and then look at the body size of the subsequent 2 candles. And realize that we're just on, even on our weekly chart, this is only Tuesday, so this has an opportunity, of course, to get to some new highs. Where do I think the market's going? Well, traders, we've got a little bit of resistance at 1750. And it's so good, unlike yesterday, to be able to look at the upside rather than the potential for the downside. But that's what I'm here for. If there's going to be potential for a downside, we want to know certain areas to look for. If there's going to be potential for the upside, we also want to have a clear indication of really what areas to look at. And there, in my opinion, is going to be some resistance at around 1802. Why? Well, 1802 is these series of tops right here and right here. After the market hit that record top, came down, formed this really strong, this turned out to be a triple bottom, but you can see the first of these bottoms here. Market comes back up and it stalls. Where? Right around 18. Comes back down, retests this area. Comes up, where does it stall? Once again, right around 18. It hasn't been able to even get close to that area since then, because what happened after that, of course, is we witnessed the market move down and then over a extended period of time find this long extended base before really pole vaulting itself to the upside. And traders, the same, absolutely same can be said for silver. There's no doubt about that. Looking again, a weekly chart, cash silver this time. And as you can see, we've had an utter breakout. We have a very, very similar pattern in that we have this triple bottom. The triple bottom is what, roughly at around $26 per ounce in silver. Draw our line from the top to the bottom. And what I would call this is basically a descending top, flat bottom, is the best way to describe this kind of a wedge or triangle breakout. Pennant if you want. It does look like a flag. But once again, when we look at silver, we see the same very, very strong breakout. Now, if the market continues to go higher in the same way that we looked at gold, there is no doubt. Look at these series of tops that we have here at 36. In the same way, you have 2 occasions where it attempted to, but really couldn't take out this price point. Now, where is it different than gold? Well, the one thing is it fell a lot harder. And so you notice that when the market fell, and if I recall, this was a 1 month move that gave up, 24% of the gains. It was a tremendously violent and volatile move, but it comes back up and you get the secondary top where? At 42. Quite a distance from this 36. And as I said, when you look at the gold market, you had a series of tops at 1802, but you didn't have really a higher top. 1802 was your secondary top, but that's the only difference. So once again, where do I see real resistance in this market in silver? Well, we've got the MACD in both gold and silver. They're showing us very, very strong potential to the upside. First target, 36 if it continues to rise. Major resistance, 42. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.